بسم الله الرحمن الرحيم. أعتقد حان الوقت للبداية. السلام عليكم جميعا، حياكم الله في ندوة رساميل الأونلاين ويبينار. معكم حمد، أخوكم حمد الشيخ مساعد، ويانا الأخوان البانلست. بسم الله الرحمن الرحيم. أرحب بجميع الحضور، حياكم الله، والضيوف في البانل. إن شاء الله اليوم راح نبتدي بكلمة ترحيبية من الرئيس التنفيذي السيد دخيل الدخيل، ومن ثم إن شاء الله راح ننتقل للسيد روبرت آسبن، مستشار شركة رسامي الاستثماري، اللي راح يتكلم عن الاقتصاد العالمي. وبعدها بإذن الله إن شاء الله مع الأخ طارق القحطاني اللي راح يتكلم عن السوق الكويتي. بالنهاية إن شاء الله راح يكون في مجال للأسئلة. راح يكون عندنا بولز، عندنا أسئلة شوي انتراكتيف، ودنا ناخذ رأيكم وناخذ رأي الناس الحضور الموجودين. أترك المايك إن شاء الله في البداية حق أبو عبد الله، رئيس التنفيذي السيد دخيل الدخيل. تفضل أبو عبد الله.
يا أهلا وسهلا، مرحبا بالجميع، نورتوا. Usually I like to do these presentations with an audience and to see the interaction and the energy level in the room. But I'll try to imagine that everybody is excited for what we are about to say, because what we are going to say is really exciting. Interesting times. I remember after the financial crisis, every year and every outlook that I've heard, and it's uncertain times, and it's uncertain decisions and stuff like that. But I think that's, and it goes without saying, became the norm. So that's why I believe having those discussions, those outlooks from multiple companies, whether in Kuwait or outside, is very beneficial, because everybody has their own view to the world. Everybody has their own outlook. Even amongst ourselves, maybe we differ slightly here and there. But whatever we're going to say today, that's the house view of Rasamil. So welcome everybody. Exciting times ahead. We've enjoyed a very nice performance last year and the year before, and of course the question that rises to our heads is, what's going to happen in 2025? Already January have passed, so we've got a sense of what 2025 is holding for us. And I just wanted to share a very simple presentation, if you allow me. It shouldn't take more than 5 minutes or less, maybe. Can you see my presentation? Okay. It's all about the narrative. It's all about the narrative. We all know that the major change or the major expectation was when Mr. Donald Trump held office, and recently we've seen the tariffs, and everybody's talking about the tariffs, and how is he going to control, and also in the previous administration, and how the chip wars between major countries and Taiwan, which raises conflict. Also, if you take into account the high debt ceiling that every year that the US keeps raising, this will put pressure on the economy, and let alone it will raise the tariffs will raise the inflation, and this will put a question mark on the US dollar. So we wonder whether or not gold will be of popularity this year or not, and maybe it will be flight to safety. At the same time, we're facing climate change with disasters happening here and there. Every month there is a disaster somewhere on the planet, and unfortunately they're increasing in severity. AI is taking jobs, displacing people. Robotics, the same way. Blockchains might create a parallel economy that will shake the mid-level countries or the developing countries. Now they're talking about, with AI, people could produce their own viruses that will take over the world and will destroy humanity. And that's one narrative. Yeah. Similarly, with chip wars, this will create more alliances. There will be more balance of power. the U.S. economy, U.S. dollar is still the reserve currency for the world. We're seeing that the conflicts around the world are being tampered down, which will lead to further prosperity to everybody. Wars again obviously is not good for anybody. Debt will be recycled. With technology, we're able to deal with, in the future, we'll be dealing with the climate change. AI will increase productivity and will create new jobs for us. Blockchain technology will help tokenize many assets. So all the shadow economies will be brought to light and will increase the global GDP. With rising viruses, of course, the medicine will be even tailored and will be designed and to treat each person individually, and will increase the lifespan of humanity, and everything will be flourishing. And that's also a possible scenario. What I'm trying to get here is that it's all about the narrative. Those are two extremes. Each one of them is a possibility, and I believe that our job and our goal from this presentation is to take it 1 year at a time, to take it one step at a time, and we see where is the world heading. There is a spectrum of many events, and the outlook is for us to try to understand in which direction the world is going. So without further ado, I just wanted to say that it's all about the narrative. If you're pessimistic, obviously you will revert to the doom scenario. If you're optimistic, you'll go to the more optimistic scenario. But what prevails is reality. And as I grow older, I realize that reality is not easy to understand. So thank you, Rob, and Tariq for taking this on and telling us how closer and to which extreme we are going towards. Thank you so much, and I hope you will enjoy your time with us and will be very positive for everybody.
مشكور أبو عبد الله. ثانك يو. يعطيك العافية على المقدمة هذه. عندنا بول أسئلة. سؤال قبل لا يتكلم مستر روب، إن شاء الله الحين ننتقل إليه. فودنا المشاركة من الجماعة. المفروض إنه طلع وياكم الحين. إحنا السؤال هو شنو الإكسبكتيشن مال ريتيرنز أوف S&P 500 2025. اوريدي صار لنا الحين شهر وسبت، شهر ونص، شهرين تقريبا. الاداء في ناس شايفين الاداء اوريدي موجود. الكلام شنو جاي بعدين given اللي تطرق له ابو عبد الله في الليدرشيب الجديده والمايند سيت فاحنا حاطينه ان شاء الله بعد نص دقيقه ان شاء الله نشوف البولز. اشوف اشياء وايد متغيره، اشوف اجوبه.
انا بس مانعيني اني اختار
لانك بانالست يمكن اي فاحنا نبي حق شيء ما يصير على حسب الناراتيف. نشوف الجماعه ان شاء الله الحين نسكر البول ونشوف النتائج بالنار. بسم الله. هذا اللي طلع ويانا. 45% moderate growth 5 to 10%. اشوف ما شاء الله conservative الجماعه. 5% اللي هم negative returns. بعدين flat to modest و 20% strong rally. mixed opinions mostly حق الناس ناس moderate. ف let's عفوا نوقف هني وننتقل الى مستر روب. So Mr. Rob he's heading our capital markets. He's the advisor of Rasamil, our investment advisor. He'll go and take us on a tour on the economic cycle and where we are at right now, and hopefully he can give us an answer at the end of the poll we just answered, and what does he think is likely to happen in 2025. شيء زياده اي احد عنده سؤال نقدر نخليه في الكيو&اي، وان شاء الله بالنهايه راح نتطرق لهم باذن الله. without any further ado, Mr. Rob, please.
Thank you very much, Hamad, and appreciate obviously being able to present my personal narrative and that of the teams at Rasamil to everybody that's online. And I'll cut to the chase, just looking at the question that was sent out by Hamad. We're not far off. We're actually, and I'll give my view straight away, we're looking for higher single-digit returns, low double-digit returns. So somewhere in the region of around probably 8 to 15% returns. And the purpose of this webinar is basically to take you through that. And, thanks to Dakhil for highlighting the question of narrative. And we're actually on the optimistic side. They do say that as you get older, you tend to get a bit more pessimistic, but I do find myself actually getting quite optimistic, particularly now with the way that we've seen this year unfold. It's been a massive change, shall we say, in the status quo in the US with Trump coming in. So I do have a bunch of slides to present. I always like to present a lot of data. What I'll try and do is keep it relatively short to around 15 minutes, and then Tarek will pick up on Kuwait, and then we'll go straight into Q&A. So with that, I'm going to share my presentation, and we'll talk you through it. Just by way of introduction, obviously we got the disclaimer, which I'll highlight, but just by way of introduction, I've been with the Rasamil Group, if people haven't met me, for approximately 5 years. So I've been acting head of the capital management group since 2019. And yeah, it's been quite a good ride, and we'll take you through the performance. Every year, including last year, we do an outlook. And basically in the outlook report, we look at what worked in the year prior, and then we try and guesstimate and estimate what we think will happen the year forward. So obviously this year not being any different, we're basically wanting to review how our calls worked in 2024. And coming into 24, I did a presentation in front of a live audience, and we were positive in global equities, positive in gold, and positive in Bitcoin. So I sort of take the view that that was quite a good result. Global equities actually had a phenomenal rally. The S&P was up over 20%. NASDAQ was up over 20%. Gold, even with a strongish dollar, was up around 27%. And I'll talk about that a little later. And Bitcoin obviously was the real outlier. So not everybody can invest in Bitcoin. There are ways that you can get into Bitcoin through the miners and so forth, but it's been a fantastic run for us. The other areas that we highlighted in our prior outlook for 24 was basically to be positive on Sukuk. We expected rates to come off. We expected inflation to come off. And we got the short end of the curve right. Rates did come off marginally in the US down to 4.5, but we didn't get the long end of the curve right. We found that worked for us at the beginning of the year and then didn't work for us throughout the rest of the year. So that quite a good result. We give ourselves an 8 out of 10. Hopefully this year we'll do better, but very happy with the result in terms of our larger overall asset class expectations. We also, just to highlight here, outperformed against our benchmarks. And I've highlighted here the disruptive technology strategy, but we manage a bunch of different strategies, some of which are designed around individual clients. And generally, we've performed very well. So in the disruptive technology strategy, we had a bumper year last year relative to our benchmark. We outperformed by around 10%. And ITD, I've highlighted it there, we're up around 61% since 2019, outperforming the index by around 20%. So, this is obviously on a gross versus net basis, but generally strong performance, and we're happy with that, obviously. Tarek will talk about the Kuwait strategy, but I just wanted to bring this up front and center. He's generated in Kuwait around 10%. Again, decent numbers, and I'll let him talk to that in detail. So enough about 2024. What about 2025? And as Dakhil was highlighting, what a start of the year it's been. We obviously had the US elections. There was a lot of speculation around that in terms of who would win. At one point, Kamala Harris was going to win. And Trump then obviously won by a little bit of a landslide, you could argue, at 312 versus 226. A couple of key things here. We've got a president who's really come in aggressively. He's really come in to do a clean sweep, and we've seen that he's signed something like 60 executive orders pretty much in the first week. We haven't seen a president do that at any stage prior. So he's come in very, very aggressively, He's doing a clean sweep, and he's got a lot of positive policies, such as, for example, looking to reduce taxes. He wants to basically abolish taxes for income tax. He's also looking to reduce corporate tax. He's looking to get rid of the global tax. He's doing a lot of very significant moves to basically bolster the American economy, but also bolster American corporates. He doesn't want to stand in front of them. He wants to stand behind them and push the economy on. Also, very importantly, is Republicans have both control of the House and the Senate. That's a very key deal in that his executive orders can actually get through. One of the other key executive orders that he did was to basically appoint David Sachs as as they say, the White House AI and crypto czar. So we never had something like that. But if you think back to the last 4 years, Biden and the SEC and so forth have actually been a headwind to the development of digital assets and AI. They didn't regulate it. The regulations were very unclear. Some were considered a security, some were not. And basically the US was lagging the rest of the world. Trump has now put that front and center. He basically has appointed David and a bunch of others working with David and elsewhere to push AI. So they've now set up an initiative to invest something like $500 billion into AI and digital assets over the next 5 years. They're also looking at potentially setting up a crypto, primarily probably Bitcoin sovereign wealth fund, and they're also looking at providing clear regulations. So massive change in the AI space, which will drive America forward in that regard. They've also announced Doge, the Department of Government Efficiency. Some may remember the meme coin Doge. This is actually quite serious business. Elon is there basically applying AI tools and software to find out how things are being spent in the US government. And so far, he's uncovered, I would say, hundreds of billions of dollars of waste. And waste, which is being used, money which is being used effectively to drive certain narratives and so forth. So they've halted US aid, and they'll be looking at doing various other things. One of the things I saw yesterday is they're looking at potentially auditing Fort Knox. Fort Knox should hold about 5,000 tons of gold. Speculation is that it's going to be a lot less than that. Some are saying maybe 500 tons of gold. And it's important to highlight here that Fort Knox has not been audited for the last, well, since 1974. So you can imagine there's potential for a lot of crime and corruption there. Key thing here, though, is Doge will reduce spending. A smaller government and a smaller fiscal deficit is good for the economy and good for less regulation, and also good for the dollar longer term. So how does all of this positive news flow, positive narrative impact the US markets? So as I was mentioning earlier, we're targeting a return of higher single digits, low double-digit returns. I'd love to be more bullish, but the reality is that the US market is actually quite expensive. So if you look at it on two metrics here, price earnings and EV/EBITDA, it's trading at very high valuations. And some could argue that you shouldn't look too much at valuations, because if you look at the Magnificent Seven, the Teslas of the world, the Nvidias of the world, the Amazons, these are global companies, and they have a significant share of the market. They're not normal companies. They should be trading at a significant premium relative to the smaller companies, which have a lot more headache and hurdle in terms of competing with other competitors in the space. And if you look at the larger companies like Nvidia, they are standing alone in their area of chip manufacturing. Tesla is standing very much alone in terms of its car manufacturing. So we need to just think about that when we look at valuations, but overall, relatively expensive. But we are expecting things to be positive. Now, why is the market so expensive, and what are we looking forward to? Well, Mag 7, which, as I just mentioned, the big 7 corporates, generated something like 81% of the last few years of market performance, versus if you look at it, the Russell 2000, which is basically small cap names, a little bit of mid cap, is basically flat. So there's been massive outperformance of these very large corporates. My expectation going forward is that the Mag 7 is basically going to take a break, and it's going to be the smaller and mid-cap companies that are going to do a lot better. So when you look at the S&P and the various indices at the top level, you're not going to see massive outperformance or underlying performance, but you will see that, I think, in the smaller mid-cap names. So the rally becomes broader. And I think that actually benefits us because we tend to be stock pickers. The names that we hold generally are more in the mid to large cap space, but not the super large cap. We tend to be underweight those areas relative to, for example, SPY, tend to focus more on the mid cap space. Talking about that and why I expect the rally to widen, if you, for example, look at the valuation dispersion between the S&P, which is obviously very much dominated by the Mag 7, you've got a median PE there of about 17 times. If you look at the smaller companies, you've got a PE there of about 13 times. So the point here is that the S&P as a whole is quite expensive, as per the chart earlier. The Mag 7 are very expensive, but they are very global enterprises that dominate their market. The real value in the market is coming from the Russell 2000, the smaller companies in the space. So that's where we think that we'll generate positive returns. Now, some will argue, how can you still be so positive given the fact that, you know, we've had 2 years of bullish market? And the point here of this table is basically to highlight when you've had 2 solid years of performance, typically the third year is green as well, also positive. And this chart highlights it quite well. There's only been 2 out of whatever, around 10 periods where we've actually had a marginal setback. So this to me basically, and it should indicate to the viewer that momentum can continue into the third year. And I think given all the policies and so forth, that's very clear. Another chart that highlights that quite effectively is when valuations are very high in the year after the analysis. So looking at the chart on the left-hand side, returns can be both positive and negative. If you look at the chart here on the left, which basically highlights where we are on the current level of PE, returns the year after can be, on average, slightly positive. The real differential is more on the longer term, 10-year returns. So you can obviously understand that if the market is expensive, but you've got all this positive dynamic, the next year, this year, 25, can be positive, maybe 26, 27. The next 8 years after that will be somewhat questionable, a little tougher. So in a nutshell, just to stop off there with the US, we're expecting positive returns. We're expecting a lot of momentum, earnings growth coming in at around 10%. We're also expecting liquidity to come in, and I'll talk to that a little later. What about other markets like Europe? Well, we're not that positive in Europe as a whole. And if you look at the Europe economy and look at the regulatory environment, it's not set up to drive technology. There's a lot of regulation which is not set up to drive AI. The euro area has basically been in a slump in 24. There'll be in a slump in 25. Take a look at Germany, for example, basically in recession. So Germany is struggling whilst the US is doing actually very well. So from a pure economic standpoint, we prefer the US to Europe. And if you look at some of the great companies in Germany, you've got Continental losing 13,000 people, Volkswagen losing 10,000. Not great. So something needs to change in Europe. The dynamic needs to change. The government needs to change and become a little bit more like what Trump is doing, pushing industry rather than acting as a headwind towards industry. European equities, though, per the chart directly in front of you, are not expensive. They've been cheap actually for quite some time. You can see they're trading at a discount relative to their history and at a discount to the market. So on the one hand, whilst we like a lot of what's going on in the US, we're cautious on the valuations. Whilst we don't like what's going on in Europe, the valuations are quite positive. So we do have exposure, obviously, to Europe. We would recommend exposure to Europe, but I think you've got to be quite selective. And bulk of it is actually going to be potentially in the financial space or oil and gas and so forth, where, you know, because technology simply has lagged in Europe relative to other markets. What about China? So many commentators, and when we read the outlooks, you get a lot of people positive on China, and it has rallied year to date. The Chinese index is up significantly, particularly the technology index. But China's been cheap for quite some time. You can see the PE there. It's been trading at a discount both against history and also relative to its peers. We should always remember, CCP stands for the China Communist Party. China is ruled by a communist dictatorship, effectively. So whilst we liked China back, if you like, in the 2021 period, and we made a lot of money in that space, China actually went through a lot of stringent controls. The regulatory environment became uncertain. And we basically became a little bit more cautious in China. And we're also cautious in terms of where the cash is being utilized within the Chinese market, because China is going through a very bad recession at this point in time. And our concern is that the companies, whether state-owned enterprises or others, are being forced to utilize their bonds to buy local debt. So with that in mind, Chinese economy is weak and so forth. I wanted to go back 4 years and talk a little bit about liquidity, but also about COVID-19. So crux of the matter is, for me, what is going to drive this market longer term? Is it going to be valuations? Yes, of course. Is it going to be earnings? Yes, of course. But I think it's also going to be liquidity driven. And if you remember back to 2020, we had one of the worst recessions ever at the beginning of the year. Basically, they locked down the various economies in March, and for a period of around 6 months, there was zero economic activity. And we were quite lucky in that regard. We had already raised cash and we were quite prepared for that. So we actually made very good returns in 2020. But I just want to highlight that the fact that the market was up, the S&P was up around 17%. We outperformed that, but the market was up 17% even in a recession. And the reason for that is because they the governments, the central banks and so forth, provided a huge amount of liquidity. And I've got a meme here. Some of you may be aware of this meme, some may not, but basically the machine goes brrr. And that's a meme that's widely seen on Twitter and X, and is basically in reference to money printing. People think about money printing and QE. It's a very sort of academic type of thought here in terms of the impact it can have on the currency and the impact it can have on confidence, etc. But in 2020, they basically printed about $4 trillion. Massive amount of money was printed, and it went into the economy, and it created a bull market. And that's why the market at the end of the day in 2020 was up. Now, if you look at the chart here, you can see the massive rise. Then you can see a decline where they impose QT. I'm expecting that liquidity will come back again in 2025. It's going to be driven by two things. It's going to be driven by Trump because he wants to reduce rates and he wants to provide liquidity to industry and basically get the economy going. It's also going to be provided, I think, by China. The reason why China is going to do it is because China is in a recession right now, a very bad one. FDI is down massively, foreign direct investment, because nobody trusts China anymore. And housing is down massively as well. So China is actually going through a massive slowdown. You don't read about it very much. It's not really in the press, but it's going through a massive slowdown as per this chart. They've done a little bit of support for the market, but they need to do a lot more. They basically need to come in with full-blown QE and get the economy going. The reason they haven't done that is QE, lower currency. So my expectation here is that the US and China are going to talk. They're going to figure out what each party needs. And I think you're going to find that the US is going to reduce rates from 4.5. They've got the room to bring it down. That will be negative for the dollar, obviously. And at the same time, China will do QE. So if you look at the renminbi versus the dollar, I think you'll probably have a relatively stable cross. And China won't be classified as an FX manipulator. So I think you're going to find a lot of liquidity coming into the system being driven by Trump, being driven by China. Before we go straight on to my summary, I just want to highlight here why, what is the bigger picture? The bigger picture is the fact that we have a crisis of debt in most of the developed markets against GDP in real term, nominal terms, real terms, or whatever. And I've highlighted this chart pretty much in every single outlook. The level of Japan government debt to GDP is 250%. It's unsustainable. It's clearly unsustainable. And for anybody that's watching here, just to let you know that in Japan, the 10-year sovereign rate is giving you a yield of around 1%, whilst inflation is running at 3%. That is called fiscal, or financial at least, repression. And I think there's going to be financial repression across Europe, and I think there'll be financial repression in the US as well. Basically, you're going to have the central banks and governments holding rates, borrowing costs down, whilst inflation is allowed to move higher. So watch out for that. And that's one of the reasons why we have Bitcoin and gold as positives. because with financial repression, you're basically going to potentially earn a negative return on your bonds further out. I'm not talking 25 and I'm not talking 26. I'm talking sort of 27, 28 period further out as these various economies get together and figure out how to reduce the real value of their debt. And I think they're going to do that through fiat debasement, which will be positive for both Bitcoin and gold. Public equities were positive there as well. You notice I'm not all the way on the right-hand side, positive and everything. New technology, I'm positive versus old technologies. So I think bricks and mortar are going to lose share to AI. They're going to lose share to the Shopify's and lose share to the Amazons, etc. That hasn't changed. That dynamic will continue. I'm positive on short duration bonds. You can still get a very good yield. And I'm marginally negative on long duration bonds. I think you've got to be quite cautious on long duration bonds, given the expectation that Trump is probably going to allow inflation to be slightly higher and he'll impose fiscal repression. So that's it from my side. And I'm just going to stop sharing right there. And without further ado, I'd like to pass on to Tarek. And Tarek has been with the team now for quite a few years. He worked with us when we were running a GCC strategy. And he subsequently has now migrated his talents into running the Kuwait strategy. So I'm very happy and pleased with what he's doing there. And I hope you'll enjoy his presentation as well.
Thank you, Rob. Before we move into Tariq, I would like also to put up a poll about same question about the Kuwaiti market. Let's see the answers right now. It should be at your screens right now. We'll leave it up. خلي دقيقة إن شاء الله.
خليني أصوت.
بالنهاية عشان لا يكون في ضغط إن شاء الله. احنا في S&P 500 التوقع كان من moderate growth ب 5 to 10%. فخلينا بدنا نشوف شنو رأي الحضور في مقارنة الكويت ويا السوق الأمريكي. السوق الكويتي الأول هذا بريمير ماركت عشان نحدد أكثر يعني. ايوه وصلنا ان شاء الله. هذا ابو عبد الله، شنو تتوقع انت؟ تقول لنا قبل كان سوينا شير، بس قبل تقول لنا شو رايك؟
انا كنت رايح على الفلات تو مود الصراحه.
فلات تو مودست وهو اكثر واحد 42%.
اي صح، بس انا بهذاك ما راح اقول لك شنو كنت حاط.
ما ادري، احنا متوقعين ان شاء الله دبل ديجيتس مثل روب باذن الله.
يلا 5% كويس استراتيجي.
احنا اوريدي واصلين هذه. ففلات تو مودست التوقع اللي هو حق السنه، الثاني هو مودريت جروث، الثالثه اللي هي سترونج رالي. ما في توقعات انه نيجاتيف ريتيرنز او انه بسيطه جدا مثل التوقع في السوق الامريكي. احنا الحين ان شاء الله ننتقل الى زميلنا طارق القحطاني ان شاء الله ويعطينا نظره على السوق الكويتي. تفضل طارق.
السلام عليكم. شاشه مبين عندكم؟ مبينه سكرين. بس بداية I would like to go through 2024 شنو صار بالسوق الكويتي معنا، شنو شفنا يعني to start. بس the Kuwaiti stock market in 2024 showed strong resilience صراحة. Despite global uncertainty that we saw everywhere, the Kuwaiti market stood steady يعني. We saw a total increase in market cap تقريبا 3.3 billion KD in that year, reaching 43.57 billion for the year. We saw both indexes rise. The Premier Market Index rise by 7.1% تقريبا, وال Main Market Index rise by 28.5%. we saw liquidity flow into both of these markets. شفنا طبعا the banking sector was the biggest one I would say last year. The banking sector is the core of the Kuwaiti economy. It showcased resilience last year. شفنا strong cost management, شفنا rising profitability. Profits were record breaking last year. We saw a strong credit growth from the banks and all that. So that set the tone for the market as a whole, as we saw. and that pushes investors into having more confidence in the broader market. We saw investors also seeking growth in the main market with companies that have more growth opportunities. We saw that along with the more established blue chip names. We can say also the market last year was also bolstered by government investment and spending, which some of the listed companies benefit from. While we saw some global instability, I think it's fair to say last year was a very positive and stable year for Kuwait. With that, we also saw that in our Kuwait strategy last year. We had a year-to-date performance of 7.1% last year, and with us being more skewed to the banking sector and more real estate sector, we were able to capitalize on those gains mostly in the premier market. So looking ahead to 2025, the strategy remains positioned for the expected continued government spending, continued increased liquidity, and continued earnings growth that we're expecting going into 2025, inshallah. So just to give you guys a broader economic outlook on Kuwait, on what to expect for Kuwait, the Kuwaiti economy, and all that. GDP is expected to grow by 3% in 2025, recovering from a retraction last year of 2.4%. This will be supported by higher oil production and higher government spending. Inflation is expected to ease down to 2.5%, improving the customer purchasing power. Our fiscal deficit also is expected to widen to 5.6% due to persistent spending, as we mentioned, and the high diversification efforts the government is trying to go on. The government's kind of new projections, I would say, is for looking for higher spending now, seeking longer-term growth and longer-term opportunities creation. I think the key aspect to look at for 2025 is the budget sustainability. I think the ability to balance the high spending with fiscal discipline will be the key in ensuring long-term stability for Kuwait. And while we do have reserves with the strong financial cushion from oil revenues and all that, I think the diversification initiatives that the government has been taking will be the key highlight in 2025 that investors will be looking at. So, as we know, the markets in Kuwait are heavily correlated to the oil prices. The rise in GDP is primarily linked to the oil sector rebound that we're expecting in 2025. We're expecting production to increase to 2.5 million barrels a day following the OPEC cut restrictions, which will boost the fiscal revenues and overall economic activity in the country. Oil prices are projected to average around $75 per barrel. However, there are risks remain with the potential increase in the US production and other geopolitical tensions. But Kuwait's low production costs and competitive positioning in the oil market will allow it to weather price movements, and hopefully we'll see more long-term growth in oil production, oil sales, and oil revenues going into 2025. With that, we also want to mention that the demand is remaining strong for oil. The oil demand is expected to grow by a million barrels per day in 2025. And for Kuwait, the demand fundamentals remain strong. But definitely there will be some external risks like economic slowdowns or global shifts in global policies, which could impact these outlooks. But just as of now, going into 2025, I think the outlook for the demand and the consumption is staying strong, which is a positive for Kuwait, especially with the increase in production expected this year for Kuwait. A point I'd like to highlight also is Kuwait's projected GDP is the second highest in the GCC for 2025, signaling a strong economic rebound following the contraction that we had this year. Definitely, this is driven by the high oil prices, the expansionary fiscal policies, and also a expected private sector recovery. The government spending on infrastructure and economic diversification will stimulate several sectors we expect for this year. And with this, we expect this GDP growth to be highlighted in the performance for the markets going into the year, as this economic momentum will be highly positive, hopefully supporting higher corporate earnings down the line, and stronger investor confidence. Also, the fiscal break-even for the oil prices will, compared to GCC peers, is dropping for Kuwait, which gives us a bit more fluidity in how we spend money and how the spending goes. I would say that the political reforms have set the stage for the economic growth and expansion for the Kuwaiti market. We've seen strong investor confidence with more economic decision-making efficiency that we've seen recently. The Kuwaiti banking sector, the cornerstone of the economy, is poised for expansion with credit growth coming in, and banks are well positioned overall just to finance any infrastructure projects, which we expect a lot to see in the coming days. Private sector expansion and any new economic initiatives the government puts forward. I think the banking sector is very well positioned to benefit from that. These reforms are expected to drive faster economic growth in Kuwait and solidify the strong market we're expecting going into next year. So going into 2025, I would say the Kuwaiti outlook remains positive. The market will be driven by high yields, high dividend yields, continued growth in earnings, which are expected in the real estate and banking sector, especially driven by the economic and governmental reforms we're seeing. We also expect continued increased foreign inflows as we saw in the past year. And just overall, I think the momentum that we saw from the past year in 2024 will continue into 2025 with several more catalysts, including the GDP growth, increased oil production, and all these catalysts will continue to push the top performing sectors we saw last year, which were the banking and real estate sectors, to continue to push its earnings forward, and hopefully we'll see a better environment for the markets in 2025. So with that, I think we'll move on to the Q&A.
Yes. مشكور طارق. Thank you. Appreciate it. مشكورين على all the input. Thanks, Rob. We'll move on to the Q&A. I have a couple of questions, but let's answer people questions first. So the first question is from an anonymous attendee. I think this is mostly for Rob. How do you see the Feds and the other central banks' interest rate policies impacting global capital markets in 2025?
Yeah, thanks for the question. I saw that earlier and I was thinking about that. It's a good question. Tariq, if you could not share your screen, and we'll just go. Everybody can see our pretty faces. It's a good question, and we had a slightly higher inflation print in the last reading. So the expectation of rate cuts for 2025 reduced from 1 to 2. So basically, the market has taken the view that the Fed is going to bring it down to around 4.25, maybe 4%. We think, personally, it's very likely they'll get down to 4%, if not marginally below that, just simply driven by the pressure from the government, the pressure from Trump. If you look at inflation is running around 3%, 2.93%. So there is room for them to reduce rates. They don't need to wait around for the 2% target to be hit. So I think rates will come off. That will, be something that Trump wants to do. It will be positive for the economy. And also right now, the dollar is quite strong against the euro because you've got a 4.5 versus a 2.5 in Europe. And I think Trump and the central bank in the US will want to bring rates more in line with European levels. So lower rates, positive for the economy.
Thank you. We'll move to the next question. Also, I think, Rob, you will be able to tackle this. Given the strong performance of the US tech stocks, do you expect 2025 to continue favoring growth stocks, or will value stocks make a comeback?
Yeah, so another good question. We actually still favor growth stocks. So again, we tend to cherry pick, and we do stock picking. We look for growth stocks that we think are not fully priced, where the underlying earnings are still coming in very strong, but the stock is not trading at significantly rich valuations. So we prefer growth. And this is particular, by the way, or particularly driven by the fact that Trump is putting so much money into AI and into the IT space. If you look at the large, the Mag 7, for example, they're putting something like $300 billion of capex. I'll just say it again, $300 billion of capex into IT for 2025. And that's in things like chip development, that's in data centers, infrastructure, power supply, et cetera, et cetera. So there's a huge amount of money coming in from these large cap names that have a lot of cash into the tech space. Likewise, you've now got the government getting involved as well, pushing that out. So I think the environment is very positive for tech, very positive for growth generally. Value stocks are, they've underperformed massively. I think where I would prefer to play is not value per se, but high dividend yielding stocks. So you get stocks that are basically giving a good return. They're generating decent numbers, and they pay out a lot in dividends. These could be infrastructure names, for example. They could be names in the stocks in the consumer discretionary space, for example. So not quite, sort of your bricks and mortar, but they've got a good market area, the low level of competition, for example, and they're generating good dividends. I don't like cheap stocks per se, because that would include things like Volkswagen, for example. Great name. I love Volkswagen generally, as a company, but do I want to own Volkswagen right now at this point in time, given what's going on in Europe? No. So again, I think you've got to be very selective.
Perfect. Thank you. Next question. I think Abdullah.
حمد
Yes.
اذا تسمح لي، انا يمكن انط عليك طارق، اذا تسمح لي بعد. انا في كذا موضوع مايت انسر موضوع الدين العام وحتى الاويل. انا اعتقد الكويت از يعني critical turning point. I'll try to answer these 2 or 3 questions together. ان الدين العام is good if it's used for projects, obviously. If it's فقط for معاشات and working capital, I think that will put Kuwait in a downward spiral. وإن شاء الله هذا الشيء ما راح يصير، لأن الحين مع announcement مع أمينة مبارك طبعا ما في details كثيرة يعني تم إفصاح عنها، وأتليست أنا اطلعت عليها، إن في more jobs to be created وضاعفوا المساحة. أنا أعتقد الدين العام مستخدم إن تطوير ميناء مبارك and create a strategic يعني created a strategic location, and we utilize a strategic location for Kuwait to create jobs, energy, renewable energy, and bypass that to حتى الدول المجاورة. I think that will play very positive for Kuwait, and that's the bright side. اللي طبعا دائما نتخوف منه ان موضوع الدين العام انه فقط اللي يروح يعني الاشياء استهلاكيه ودعومات. اعتقد we are on the right track مع الانونسمنت الاخير مع ميناء مبارك. I'm positive ان شاء الله. عاد الحين يبقى بارت الاكسكيوشن، والله يوفق الجماعه.
ممتاز، يعطيك العافية عبد الله. I think also if we can't, you already, Rob, we've been an investors in the fixed income for a while now. We got a question: how do you see Sukuk market evolving? You already touched upon this for during your talk. 2025 for GCC issuers.
So I would say 2 things. Number one, the market will get bigger over time. It's already expanded significantly if you look over the last 20 years. There is demand for Sukuk. So the market will become increasingly efficient, and pricing will be also efficient. in terms of how I see rates and so forth, you can buy the short end of the curve and get a yield of around 4.5%. So I think that's a very good way to park cash, to basically maintain dry powder in a market, and you're getting a very good yield. Having a little bit of exposure to medium duration, so in the sort of 5 to 10 year period, also makes sense. But I think, you know, as I say, I was quite bullish in that space because I expected that yields would come off. And to be honest, if you do get financial repression, yields could be forced lower by the various governments, right? And the central banks, they basically bring the yield down to whatever rate they think should be the market rate, and that can happen. So, but my problem is that it's the governments that are driving. It's the central banks and the governments that are driving the longer duration yield, and I think one has to be quite cautious around that space. So I'm cautiously optimistic, shall we say, but at the same time, I'd underweight it because I can find better value in the short end of the curve.
Perfect. Also, it's a question about Bitcoin. How do you see Bitcoin and adoption regulatory evolving in 2025? I think you just mentioned the czar of US. Do you believe that 2025 will see the turnaround of the regulation, especially worldwide? I see a lot of countries, they're taking the initiatives, especially in Europe, but in the US as a leader, do you see that's happening?
Yes, I do. I think that's extremely positive. I think it is happening. On the adoption rate of Bitcoin and crypto as a whole, you can find various data points to highlight that the adoption rate is higher than the internet adoption rate. So it's basically, you know, increasingly exponential. So people are moving towards crypto. Coinbase, for example, is also introducing credit cards and debit cards, which are related to crypto accounts, so basically providing users an access, if you want to capture traditional banking, but within a crypto space, outside of the banking space. So you've got companies that are very aggressively moving into the space and widening out crypto adoption. I also think that sovereigns will buy into it. So we've seen, for example, El Salvador, they now have obviously a Bitcoin sovereign wealth fund. I think the US will probably roll that out. I think they'll probably create a sovereign wealth fund, including gold, and may even sell some gold to buy Bitcoin. And remember the fact that if Doge is successful, they're going to be saving money at the government level, and that money can be basically funneled into buying Bitcoin in a sovereign wealth fund. And we should also highlight the fact that I think it was one of the sovereign wealth funds in Abu Dhabi recently bought Bitcoin. They're one of the bigger holders now. I think they're in the top 20 holders of GBTC. So you have a lot of focus on Bitcoin. My expectation, I shouldn't give you a price target per se, but this is my personal price target, would be probably about 150,000 by year end, if not slightly higher. And then you go through the normal cycle. People, you know, overbuy it, comes off, oversell it, and so forth. But I think the adoption phase is there. And just I know, long answer, but don't forget that like a year ago, 2 years ago, Bitcoin was right on the periphery. Nobody was talking about it. Now the banks are talking about it. Trump has told the banks to allow people to buy their Bitcoin, and you've got sovereign wealth funds buying it. It's complete sea change, massive.
I remember, Rob, the first Outlook we did maybe 6 years ago, even before your time, and somebody asked about Bitcoin. I actually laughed at a person who asked. I said, "Please, this is a serious talk here. Don't talk something on the side." Which I regret that.
Things have changed, but I mean, you weren't wrong. If you go back, 7 years back, that's what the majority of people thought, right? And things have changed now. So
also, would like to we'll take the next 3 questions or 4 questions. I think the next 2 questions are somewhat similar from Saud Al-Badr and Hamad Al-Nadaf. So Saud is asking about growth and dividend targets for the long run. Do you favor Kuwaiti or international markets? And this is also, I want to put it with the, this is either Tariq can tackle or Rob, and also Hamad's question, which is, what is the biggest risk for your outlook, and how would you hedge against it?
So maybe I'll just kick off the first one in terms of growth and dividends. I think if you're looking for growth, you look at the US. If you're looking for dividends, you look at Kuwait. So we have a unique offering. We offer both, right? For those that want exposure to disruptive technologies and technology, or even more, aggressive, we have a special tech product as well that we run for one or two clients, and that's more focused on tech. So we would focus on growth in the US. Second question, and then I'll pass it to Tarek. Biggest risk to the outlook. Maybe Tarek should also address that in terms of his outlook on Kuwait. Look, I think the risk of war has now dropped off. So geopolitical risk, I think, has declined. You've had Trump that's basically called up Putin after what, 3 years of conflict with Ukraine, and he said, let's have a peace deal, make it happen. And I think that's a positive. So what is the biggest risk? I think maybe inflation rises higher than expected. That is a risk. I don't see tariffs driving that per se, but inflation, there is still so much money in the system that we have to be aware of that, and that can obviously drive inflation higher. Maybe, I mean, you don't want to go down there, but what is the biggest risk? I mean, it could well be something insane like bird flu. That would be, because I think the risk of war is now, so the real geopolitical issues are lower, but the risk of things like bird flu could increase. And why do I say that? Because we also now have Robert Kennedy Jr. getting into power. He's now the Secretary of Health in the US. He controls a budget of $2 trillion. His focus, and he's now set up a group to do it, is MAHA, Make America Healthy Again. Who do you think is going to be wanting to, lock us down and reduce the effectiveness of MAHA? It's going to be certain individuals, party groups within the deep state that may be pushing their narrative, as they did in 2020. So we've got to be quite careful about that. If people are aware of the science, we were pushed into lockdowns in 2020 for no real reason at all. And I think that, if you want my worst case scenario, that's the worst case scenario. But otherwise, I'm actually feeling pretty comfortable, surprisingly.
Nice. Perfect. Also,
maybe Tarek, you want to pick up your thoughts on the 2 points?
For Kuwait, I think, to keep it simple, the biggest risk would be oil volatility, oil prices. Last year we've seen a very volatile oil market. I think more stability in that would definitely help our outlook going forward. That would be the key risk, and I think just the reforms we're seeing, the pace of the reforms, the spending. If the spending goes to the right places, I would say then we would see the biggest risk would be misuse of that money we have. I think that would be the biggest risk, along with the oil volatility. Just to answer it quickly.
بيرفكت. يعطيكم العافية جميعا. مشكورين على الحضور. شرفنا. بس عندنا بالنهاية تطبيق ماي رساميل الخاص فينا، بإمكانكم الدخول عليه، تسوون لنا داونلود إن شاء الله في المعلومات اللي محتاجينها. بالمقارنة، آخر مقارنة بين الأسئلة البولز اللي تم سؤالها والأسئلة والأداء مالنا. احنا سألنا سؤالين. السؤال الأول هو عن يتكلم عن أداء السوق الأمريكي الS&P. احنا والبول توقعات كانت من 5 إلى 10% في هذه السنة. والسؤال الثاني كان على السوق الكويتي، كانت التوقعات من 0 إلى 5%. احنا كرساميل ندير محافظ الخاصة فينا. احنا الحمد لله ولله الحمد إلى حد الآن بداية السنة محققين 6.2 في السوق الأمريكي، محققين تقريبا 8% بالسوق الكويتي. انتم جت الاجوبه صحيحه، لكن هذا الاداء في اول شهرين. الله اعلم، ان شاء الله يكون يسهل على الجميع، ويكون سنه كريمه ان شاء الله علينا جميعا.
وبس شغله اخيره، اذا في اسئله ما
تفضل.
جاوبنا عليها، ممكن جماعه من خلال التطبيق في مكان الشات they can ask it and we answer specifically من خلال الابلكيشن، سواء بالعلاقه بالويبينار او شيء ثاني.
يعطيكم العافيه جميعا، وما تقصرون. ان شاء الله اشوفكم على خير. مع السلامه.